Hey everyone, welcome back to Corporate Decoder, the place where we dig into company filings so you don't have to. Today we're diving into Blue Owl Capital's annual report. It's going to be a wild ride filled with numbers, deals, and maybe a surprise or two. Think of it as that one class you took in college you needed for graduation, but this time I'll help you not fall asleep halfway. Blue Owl, a big name in the world of alternative investments, just dropped their yearly report and it's packed. We're talking about a company managing over $250 billion. Let's decode what's really going on and see if it's a good investment. First, some housekeeping. When they say Blue Owl, the company, us, or Owl, they're talking about the whole shebang, Blue Owl Capital Inc. and all its little helpers. There are a lot of TLAs or three-letter acronyms, so keep up. Let's get into the big picture. Blue Owl's assets under management, or AUM, is a whopping $251 billion. AUM is all the assets they manage, including debts and uncalled capital. Fee-paying AUM, or FPAUM, the assets they actually make money from, stands at $159.8 billion. They make money, they get AUM. Now, Blue Owl isn't a one-trick pony. They have three main areas: credit, GP strategic capital, and real assets. Credit is all about lending money, especially to those upper middle market companies. GP strategic capital, they invest in other investment firms, like a fund that invests in funds. And real assets, that's mostly real estate stuff. Within credit, their strategy includes both diversified lending to various middle market companies, or technology lending to technology related companies. The direct lending business, lending to sizable and defensive businesses, makes up almost 100B of the credit platform. GP Strategic Capital likes to invest in stable, multi-product alternative asset managers. This platform's GP debt financing strategy focuses on making secured term loans to these managers. And last but not least is a small business that focuses on professional sports teams. The real assets business focuses on acquiring triple net lease real estate, where tenants pay most of the expenses. One of Blue Owl's big strengths is what they call permanent capital. This means a large chunk of their money is locked up in funds that don't have a set end date. Think of it like having a really loyal customer base. It gives them stability and predictability. 91% of their management fees come from permanent capital. They have around $22 billion in AUM that isn't yet paying fees, meaning once that money is put to work, their revenue will get a bump. This is a result of current AUM with built-in mechanisms for fee revenue increases. Most of their income comes from stable management fees, not riskier performance fees. Predictable revenues are key. Blue Owl has built great relationship with alternative asset managers so they can source potential investment opportunities for their products. Blue Owl's global investor base is growing and is built on institutional relationships and a growing retail investor base. They are also serious about diversity, equity, and inclusion, with leadership from senior leaders across all business areas. To grow, Blue Owl plans to launch new funds, especially permanent capital vehicles, expand globally, focus on adjacent products, and consider value-adding acquisitions. But of course, no rose without thorns. The investment business is super competitive, and it is getting even more competitive as institutional investors seek to consolidate their investments. Many of their investments are hard to value, which makes the fees they collect a bit subjective. Also, those juicy returns they've seen in the past, no guarantee that will keep happening. There is vulnerability to shareholders of non-traded products to want to pull their money out. They might not be able to successfully merge new acquisitions, retain employees, or manage growth. And of course, cyber attacks are a constant threat. A successful breach could disrupt everything. They depend a lot on their key people, and if any of them were to pass on, there could be financial consequences that could extend up to 5 years. Also, there is always the possibility of employee misconduct and conflicts of interest. The business is subject to extensive domestic and foreign regulation, and there can be no assurance that they will satisfactorily comply. Here is where it gets a little hairy. Conflicts of interest, a ton of things can go wrong and end up affecting employees and stockholders. The way Blue Owl is structured with different classes of stock concentrates power with the founders, limiting other investors' say. In addition, be aware that portions of the financial statements are based on various estimates from people in the management. These estimates and judgments are necessary to make it all work, but of course is not bulletproof. Lots of risks involved that could lead to a rapid fall, some of which may include failure to recognize benefits of a current or future acquisitions. And now they have to consider multiple ways that climate risk may affect them. They have also considered recommendations from the Task Force on Climate-Related Financial Disclosures. Blue Owl is seeking to develop a diverse, equitable, and inclusive firm. They also focus on citizenship through supporting various non-profit causes. In a new step, the board adopted resolutions authorizing the adoption of an amended and restated certificate of incorporation in connection with an internal reorganization. The company makes available financial information on its website. Blue Owl's Class A shares trade on the NYSE under the symbol AEEEEEEEEEE. They use leverage to finance their business, which exposes them to risks, and as borrowings mature, this could mean potentially increased cost of borrowing. The business considers alignment of interests of its executive management team and other professionals with those of investors in their products. Conflicts of interest may arise when one or more products make an investment in a company with which other products or platforms have a business relationship. They are subject to scrutiny with insurance client practices. Economic sanctions may prohibit Blue Owl from transacting with certain countries. So what's the final verdict? The numbers look good and Blue Owl seems to be heading in a strong direction in a sector with great tailwinds. But it's worth noting that past performance isn't always an indicator of future success. There's also a lot of estimates in their book values. The multi-class stock structure concentrates voting power with the big guys, which could make this a weakness for you, the public investor. They seem to be using their strategic relationships with key institutional investors and growing their reach in key places. So, what is the price target? They've got great tailwinds in an emerging area with some weaknesses mixed in. A reasonable range would be $20, $22 per share, based on the amount of money they manage per share. Overall, I'm biased towards a bullish or a buy rating on OWL shares. Thanks for watching, and if you found this useful, please subscribe to the channel for more in-depth looks at company filings.